Are you shocked at the strength of stocks to start the year?
Morning, Brian. It's really great to be here. Well, we're seeing a bit of a flip side from last year because it's the inflation story that I think is driving the gains in stocks. And as you highlighted earlier, Europe being able to avoid a recession because gas prices have continued to plummet, which means inflation coming down faster. I think that's the story for the stock market this year. If we continue to have a consistent decline in inflation, then we know that monetary policy will not do much anymore from here, maybe one or two hikes. But most of all, the recession may not happen or at least be pushed out in the future. So in that sense, the surprise is more about that the recession isn't happening yet and therefore the stock market is up. So I think we'll continue to stay in this mode, but we're not breaking out of the bear market just yet. There's a lot of technical resistance that we're coming up against.
Yeah. We like to see stocks going up. We like that. However, if I had to be a bit of a bear, it's early, maybe I'm a little bit grumpy, I would say that the stocks that are doing the best are many of the ones that got hit the hardest, sort of lower profit. I hate to say lower quality names, but you know what I mean. Is it going to last?
So that's much of a momentum play, Brian, right? It's like what people, comparing those stocks and looking at liquidity measures and trying to see like, well, there's somewhat uplift here of markets and sentiment. So then, you have the momentum traders come in and they quickly cover their shorts there, or they jump into an opportunity to capture 10 to 15% gains in stocks like that right out of the gate. And then you can question how much of sustainable that really is, because if it is all short term, it's not really about valuation or fundamentals. It's more about these prices were just, of these stocks were down so much. That's only the upside you really have in returns for that. And so I think we're going to continue to have the very choppy range here. The S&P seems to be struggling at 4,100.
Yeah.
The Nasdaq is still below that 11,500. I think that's that sort of tug of war between the momentum traders, and people are looking at an opportunity to say, no, there's real value here now. And I think, again, as I said, it plays out in the inflation picture. I think that's where you really want to step in if it's really changing to the downside inflation.
But isn't this it? On the S&P 500, I mean, we are at resistance. If you look at a chart for a year or 2 years, this 40, 50, 4,100 level, somewhere in between, that has been where resistance has been. We have failed almost every time in the last 12 to 18 months. If we can survive this and break through it technically, Ben, do you see this rally maybe rolling on, or are we doomed to fail either way in the spring, maybe early summer?
Yeah, it's not an easy question to answer because, on the one hand, the technicals are dominant, and they've been dominant since basically when the Ukraine war broke out. Markets recognized there was a bear market starting, and we've been in it ever since. And we try to, maneuver out of it and make a lot of arguments about that. Valuations have gotten an awful lot, and inflation is maybe coming off, and the Fed will stop raising rates and maybe pivoting to easing. But none of these reasons have actually changed the bear market. So we have to respect the technicals. On the other hand, you have a lot of other risks coming out. So energy prices, for example, have started to rise again. Commodity prices are up because the China reopening is probably doing that. So I think you want to be a bit cautious here and respect the technicals, that if you do really sustainably break that 4,100 level and it becomes like a support level, I think then you can take a cue from it and saying, okay, the bear market is changing, and you can make a different call on stocks from here.